Welcome back to Explain the Charts, everyone. Today, December 4th, 2025, we're doing an in-depth analysis of ETHUSD, a market that has been nothing short of a roller coaster over the past few days. A major catalyst for this volatility is the highly anticipated Fusaka upgrade, which went live just yesterday, December 3rd, at 21:49 Universal Time Coordinated. This upgrade is designed to significantly improve Ethereum's scalability and transaction processing efficiency, particularly for Layer 2 networks, through its PeerDS feature. The market's reaction has been a mixed bag of fear and euphoria. Just a few days ago, around December 1st, we saw news headlines screaming about Ethereum crashing, with prices dipping well below $3,000, some reports citing $2,841. This drop was attributed to a broader crypto sell-off, mass liquidations of leveraged long positions, and thinning weekend liquidity, highlighting the market's fragility. However, as the Fusaka upgrade approached and then activated, the narrative quickly shifted. Major players, like Tom Lee's BitMine, were reportedly buying the dip with substantial ETH investments, even while facing unrealized losses from previous market downturns. This accumulation by shark wallets ahead of the upgrade was seen as a bullish signal. By yesterday, December 3rd, sentiment had turned overwhelmingly positive, with news outlets reporting Ethereum jumping and reclaiming the $3,200 level, drawing comparisons to the PEC draw upgrade in May 2025, which triggered a significant rally. Analysts are now eyeing potential surges towards $5,000 if this bullish momentum continues. Now, let's turn our attention to the charts to see how these events have manifested in price action. Looking at the daily chart for ETHUSD, we observe a long-term upward trend since mid-2024, despite several sharp corrections, such as the significant drops in August, February, and March 2025. These pullbacks often tested key support zones before buyers stepped back in. Zooming into the most recent period, the daily candle for December 1st clearly illustrates the reported crash, showing a sharp drop from above $2,990 to close around $2,803, with an even lower intraday low. This initial post-Fusaka, or pre-activation jitters, decline aligns perfectly with the news of a crypto sell-off. However, the following two daily candles, for December 2nd and December 3rd, paint a dramatically different picture. Yesterday, December 3rd, ETH closed strongly at $3,190.40, confirming the news of it breaking above $3,000 and approaching the $3,200 mark. This V-shaped recovery is a strong bullish signal, suggesting that the fear from the initial drop was quickly absorbed by renewed buying interest, likely fueled by the successful Fusaka upgrade. For long-term investors, this demonstrates Ethereum's resilience and the market's underlying belief in its technological advancements. To get a clearer view of this dramatic turnaround, let's switch to the 1-hour chart, focusing on the past few weeks. Here, we can distinctly see the gradual drift lower in mid-November, where prices tested the $2,900 to $3,000 region. The sharp sell-off on December 1st is visually striking, with consecutive red candles pushing ETH down from nearly $3,000 to lows around $2,718 within hours. This rapid decline confirms the mass liquidations and liquidity flush narratives from the news. However, the immediate bounce from these lows, stabilizing around the $2,800 region, suggests strong buying pressure emerged at these key levels, likely fueled by entities like BitMine buying the dip. The subsequent steady climb throughout December 2nd and 3rd, marked by consistent green candles and rising volume, is a direct reflection of the renewed optimism surrounding the Fusaka upgrade. The move above $3,000 on December 2nd and the further ascent towards $3,200 yesterday are clearly visible, indicating a strong short-term bullish reversal. Let's zoom in even further to the 15-minute chart, covering the critical period from December 1st to the end of December 3rd, to appreciate the granular detail of this price action. Here, the intensity of the December 1st crash becomes undeniable, with rapid successive drops taking ETH to its multi-week lows. Notice the heavy transaction volume during this sell-off, indicating panic selling and forced liquidations. However, pay close attention to the subsequent recovery. The price steadily built momentum, crossing back above the psychological $2,900 level and then decisively breaking the $3,000 mark on December 2nd, around 1534 Universal Time Coordinated. The rally culminated in a strong close near $3,190 yesterday, December 3rd, directly after the Fusaka upgrade activation at 2149 Universal Time Coordinated, validating the market's positive response. This shows that while short-term movements can be aggressive, underlying fundamental developments can quickly shift market sentiment and direct price reversals. So, what are the key price levels to watch, and what drives the bullish or bearish cases for ETHUSD? From a technical perspective, the $2,800 to $2,900 zone proved to be a strong short-term support during the December 1st dip. A more robust, longer-term support level, referenced in news reports, lies around $2,600 to $2,650, which would be critical to hold in any significant future pullback. On the resistance side, the $3,166 level, previously identified as a key hurdle, has now been overcome, with yesterday's close near $3,190. The next significant resistance points, often discussed in the context of a Pector-like rally, are around $3,653 and potentially $4,262. Beyond that, some analysts are even forecasting an ambitious $5,000 target. Short-term, the bullish case is strongly supported by the successful Fusaka upgrade, which is expected to enhance network efficiency and scalability, attracting more users and developers. The rapid price recovery from the December 1st crash, coupled with reported whale accumulation, indicates strong underlying demand. Long-term, Ethereum's cemented role as an on-chain finance settlement layer, continuous upgrades, and growing institutional interest provide a solid foundation for growth. However, we must also consider the bearish perspective. The market is still highly leveraged, and as seen on December 1st, a lack of liquidity can trigger cascading liquidations. A failure to hold the $2,996 support could see ETH retesting $2,873 and potentially even $2,618, similar to Tom Lee's $2,500 exhaustion point prediction from November. Traders should monitor volume alongside price action for confirmation of trends and keep an eye on broader crypto market sentiment, especially Bitcoin's performance, as it often influences altcoins. Additionally, any unexpected delays or issues with future Ethereum developments could temper bullish enthusiasm. Conversely, continuous positive news on Fusaka's impact on Layer 2 scaling and lower transaction costs could propel ETH higher. To recap, the important price levels to watch are immediate support around $2,900 to $3,000 and stronger support near $2,600 to $2,650. On the upside, having cleared $3,166, the next key resistance targets are $3,653, $4,262, and the ambitious $5,000. A sustained daily close above $3,200 would reinforce the bullish momentum, making a move towards $3,653 very likely, especially if trading volume remains robust. Conversely, a drop and close below $3,000 could signal a retest of lower support levels, making a move to $2,873 or $2,618 moderately likely. Look for continuous positive news regarding the Fusaka upgrade's real-world impact and broader market inflows to confirm bullish continuation. Remember, this is not financial advice. Always conduct your own thorough research before making any investment decisions.